Good evening and welcome to this webinar series with myself, Charlie Burton, in conjunction with Tickmill. So tonight's webinar is on this subject of a simple S&P trading strategy, and it really is because sometimes the most simple strategies are, I wouldn't necessarily say the best, but they're easy to execute, and I'll go through that in just a moment. So before I do so, though, we always, from a regulatory perspective, must go through the regulatory disclaimers. The material provided is for information purposes only and should not be considered as investment advice. The views, information, or opinions expressed in the text belong solely to the author, that's me, and not to the organization, committee, or other group or individual company, that's Tickmill. CFDs are complex instruments and come with high risk of losing money rapidly, etc., etc. So there's all of our risk warnings there. Shall we get into the presentation? Yes, let's do that. I'm sure many of you have been to previous ones. We'll talk about that in just a moment. Okay, so the simpler the strategy, the easier it is to execute. That's my quote there. So this is pretty straightforward. It's not going to make you a multi-gazillionaire, though. Some of you will be disappointed in that regard. However, what we are going to do here tonight is run through the nuts and the bolts of how I put this strategy together. I'm going to go through all the rules with you, but also I'm going to give you some pointers where you may want to look at it yourself and adapt it. So it might be you want to adapt it onto different time frames, for example, and adapt some of the settings and maybe even adapt some of the markets you would like to look at this on. Okay, let's get into it. So what we're going to be covering tonight is a rules-based strategy on two different time frames. So this isn't, there's no discretion with this strategy, not as I am teaching it. It is purely a mechanical-based, rules-based strategy. So it's literally paint by numbers, so to speak. So you just follow the rules, and when it gives a entry, you take the entries, and when it gives an exit, you have your exits. So, and of course, all of that is adaptable, but I'm showing you how I use it. So what we're going to be covering is that strategy on two different time frames. As I've already said, you may come away tonight and say, well, actually, I'm going to look at this on some other time frames as well. I'll give you some pointers on that. We're going to go through setting up your charts for this, because obviously it does need setting up for charts, just with some simple indicators on it. We're going to go through the back-tested results. We're going to go through the live results of this strategy as well. I've been using it for the last 2 years. Okay, and we're going to discuss automation of this, because some people like to program, and so we'll discuss that as well, because you can, it's the sort of thing that you can automate. Actually, I do have it automated, and I'll show you some of that. But first, if you want to see some of the previous webinars that I've done with Tickmill, just go to tickmill.link/Charlie Burton. So if you go to that web address, it will bring you through to, actually, why don't I just bring it up? Can I find it? So it will bring you to this website here. And if you scroll down on this website, it's like a microsite that Tickmill very nicely put together. Scroll down to the bottom, you can see the previous webinars. There's a little arrow here, so you can click on that, and there's a load of the past webinars in there that you, if you're interested in any of those. So that is that web address. Okay. Let's get the presentation back. And lastly, in association with Tickmill, if you have any interest in opening an account with Tickmill, and I must say I've been working with them, I know I say this every month, but I've been working with Tickmill for the last couple of years, and I really like their personnel that I've dealt with over the last couple of years or so. And they've got very good tight spreads and cheap overnight charges. They're very competitive. Um, and so they're run by two CEOs who are ex fund managers and still are. So they understand what traders want. So do get in touch with Giuseppe, and if you're interested in opening an account, and he would love to hear from you. So that's Giuseppe at tickmill.com. Right. Should we get on? Yeah, let's do that. So first of all, we're going to go through setting up the charts. So I'm going to go through these. What I'm going to show you right now, if you've got a phone, just take a photograph of the screen. Now, this webinar is going to be uploaded, as I've just said, onto that website, but they might, we're relying on their technical people. Sometimes they're really busy and it might take them a week. So I would suggest either taking screenshots as I'm working my way through tonight's presentation, or just use your camera phone and take photographs as I'm going through these screens. That may be the easy solution. So, okay, this is really simple. Oh, actually, before I even bring this up, this is a long only trading strategy. Okay, it's the strategy. When I put it together, it's devised to work in the stock markets. It's not, it won't work in FX, for example. FX moves around too much. It's always in bull runs, bear runs, it moves around a lot. Whereas the stock market is predisposed to going up until we get bear markets, of course. So this is a long only strategy. You can't take the settings and reverse them. Well, you can try, but I have already done that, and it doesn't really work in reverse because the stock market spends much more of its time doing what? Going up than it does going down in bear markets. So this is all tested. All the rules are there for long only trading, and it's designed for the S&P, but you could certainly test it on other stock indices as well. Okay. And some of you clever bods, you may say, okay, but what about any other trending market that's, let's take gold as an example. Gold is in a big bull market. Could I apply it to that? Well, I don't know. Have a look. But it's designed for trading stock indices. But I love it when people take an idea and then say, "Oh, Charlie, yeah, but I applied it to this market, and actually it works quite well in some commodities or whatever." Yeah. Okay. So setting up the charts, a 250 simple moving average on the chart. Okay. So the 250 simple moving average is just giving. So if this is the 250, yeah, absolutely. Nasdaq will be fine with it. Yeah, any US indice will work, and many other indices. You can look at it on the DAX, German DAX, or any index. Oh, there you go. I beat you to it, Siobhan. Any stock index, it's worthwhile testing on. Okay, so right. So one of the filters is to say, okay, as long as price is above the 250 day moving average, because I set this up originally on daily charts. I know a lot of you are interested in intraday, and yes, can you look at this on an intraday time frame? Absolutely, you can adapt it, but just bear with me here tonight. I'm going to go through the nuts and the bolts of my trading rules with it for trading off of daily charts and also off of the 8-hour time frame as well. You can take all of that, go and have a play with it, and on whatever time you want to trade it or you want to at least look at it on. So one of the rules on the daily time frame is the 250 day moving average. Okay. You got to bear in mind, guys and girls, I can only keep an eye on your comments so much of the time because I need to get through this. So, one of the filters is as long as the price is above the 250-day moving average, then that's the first filter. That's what defines the fact that overall it's in an upwards trend. If price is below the 250-day moving average, well, maybe we're in a bear market, whatever. It just means that you don't take any trades when price is below the 250-day moving average. Okay. We are using an RSI, a 4-period RSI for this. A 4-period RSI. So nice and simple. Standard RSI setting is what 21 is your stock out of the box RSI settings. This is a really short term setting, and 14 as well, Brett. You're right. 20 depends. Yeah, people either use a 14 or a 21. So that's your standard setting. But I'm using a 4 for this specific reason. Then, as far as the values are concerned, the oversold value is 33 that I use. But I do have a couple actually. I'm going to show you those. So 33 and the overbought value is at 77. So they've been adapted, right? So if I just draw on here, if I've got my RSI window here, and this is 33 here, and this is 77 here. When the RSI gets below 33, that gives a buy signal, providing price is within an upwards trend, of course, which it is defined by it being what? Above the 250 period moving average. So if price does a pullback and gets oversold on the RSI indicator, that's a buy signal at the close of the bar. And then the exit is as and when the RSI closes above 77. I've told you it's simple. Okay, so it's really, really simple. Um, so, but there's a few more rules, of course. You need to use an average true range with it. So I use a 30 period move average true range on the daily time frame. And one final thing, all these settings should be tested and personalized because what one individual likes with it, another individual may want to tweak. So please take a screenshot of this slide because I'm going to move on to the next slide in just a second. Because there's a couple of more rules on this. But before we get on to the other rules, I'm going to give you a visual. Okay, here we go. So this is the chart of the S&P, and I took these screenshots just earlier this week. I always like when I'm putting the presentations together to bring up a chart which is as close to the presentation date as I can, because it looks more relevant. But as you can see, certainly at the moment, the S&P is a little bit lower than where it was when I took these screenshots. Okay, so let's go through some examples here. So when I took the screenshot and put the circles on, I just started in the middle. I could have started right over on the left of the page, but there was enough examples over this last sort of 12-month period that I just thought I'd start here. So we've got our point here whereby the price itself has pulled back. The S&P at that point has pulled back. My yellow line is my 250 on this chart day moving average, and it's a simple. So price pulls back enough for the RSI to generate a buy signal. That signal comes in at the close. So you actually enter the trade right near the close of the day. So very often you're entering, if it's on a down bar, right at the bottom of the down bar, which is quite nice, because you're getting the better ended up, the better entry relative to where you get out. So we got a buy signal down here. We're using an average true range to calculate the stop. And the stop, I've got it on the next slide anyway, but it's 3 times the average true range. So it gives it a nice bit of wriggle room. Okay, so the stop loss, if the average true range is that, then the stop loss is down here somewhere. So it gives it a nice bit of room to breathe as far as the stop loss is concerned. And then the exit is when the RSI closes above that 77 level. Now, you can get really clever. I'm just going to give you some tips here, tips and tricks, some ways to personalize. You could say, could I use the RSI to get me in? And maybe a stochastic going above 80 to get me out. So we're using what I call a dynamic exit here. So we're not using a price exit. Again, you could look at all these things. You could say, well, if I'm getting in on a pullback, could I not just always target a prior high? Yeah. There's a multitude of things you can do to personalize these rules. I'm just going through the basics of it, and which gives you some ideas, and I'm throwing some more ideas at you now to say, maybe I could use a stochastic going above 80 as an exit. Oh, I'll test that. Or I'll test, price coming back up to the prior high, whatever you might want to use. Just giving you some ideas. So if I click on the chart, there's the next one over here, where actually there was one over here as well. Looks like it dipped just below 33 there, but anyway, I've just circled it off. And then over here as well. And then if I've got the arrow, oh no, and then we've got the one currently. There is one right now this week on the S&P. I'll give you all the stats, the win rates, all of that stuff in a minute. So there's our exits as far as the RSI getting above 77. There's the exits. Oops, didn't need to do that. Get it going all the way across this. So, okay, so that's the basics of it. So providing prices above the 250-day moving average, then anytime the RSI goes below 33, it gives you a buy signal. Now, some of you might say, but what about, I take all these off. What about, Charlie, if I used an RSI go at a lower level? So maybe, what about if I use a 20? Yes, you can do that. And only buy when the RSI goes below 20. So why do I use a 33 on the daily chart? It comes down to trade frequency. Sometimes, so the 20, yes, it's asking for a little bit more of a deeper pullback when it goes to 20. The problem is that historically, there's a lot of instances where having the setting at 33 triggers you in. Let's take that example there. Triggers you into a trade. Nice entry there. And then you've got your exit coming over here. Okay. But it wouldn't have triggered using the 20. So you miss out on a trade. So what happens is using a 20 on the daily time frame produces less signals, which you might say, oh, that's fine. Yeah, that's fine. But sometimes this is already a fairly low signal strategy. Now, that you're thinking, oh, this is triggering trades, almost every month. Yeah, but it's not like that every year. Yeah, that's what happened over this past 12 months, but it's not like that all of the time. So it's generally a low frequency strategy. So if you're looking for the RSI to come even lower, then you're going to get even fewer signals. And therefore, it brings the overall performance down just because it's not taking enough trades, not on the daily charts. So I must point out, this is a plodder strategy. This is, like I said at the beginning, it's not going to make you your millions, but nevertheless, I'm going to show you all the stats. I'm going to show you the live results in a minute. It's just plods along. So it's something to have running in the background rather than it making you your 5% a month or all that. It's never going to do that. Not in on these settings because it doesn't trade enough. Okay. So just a few thoughts in that regard. But certainly you can use a lower setting for the RSI, but those are just some things to consider. Right, let's move on. Don't think there's anything else to say at this stage. No. Okay. So these trading rules. Price must be above the 250 moving average. Price must have pulled back and therefore the RSI has closed below 33. These are on my settings. Like I said, you can play around with all of that. You can have that setting lower than 33. But like I said, it will mean that you'll end up getting fewer signals, and fewer signals can mean that you end up just making less. Someone said, what is the average true range? Okay, the average true range it's an indicator on your charts, Abdul. And so the reason I'm stuttering is purely because that's a very, very basic, and there's nothing wrong with you asking the question, but I'm not really here tonight to start going through really basic stuff. But what it is in simplistic terms, it's taking the average range of the bars. So if you've got a number of bars, of price bars doing this, as you can see, some are a lot bigger here and some are a lot smaller. So the average true range indicator is taking all of those bars and then making an average of them to give us an average range. Okay. So if we add up all of those bars, there's a bit more of a calculation to it. But if we add them all up and we find the average, and the average is it's on the S&P, so $20. So what that's telling us is the average daily range of the S&P is $20. Okay. And then we want to have a stop loss, which is, as I've said on the daily chart here, 3 times that. So whenever I take a trade, I'm going to have a stop loss of $60. Okay. So an average true range indicator, it's just an indicator on your charts. All charting packages have it. Just look for it in your indicators, and you can pop it on and it will tell you what your average true range is. And you just change the setting to, what did I say? The average true range it's 30 on the daily chart here. And we use a 3 times average true range. So a 30 period average true range is it's looking at 30 bars in order to create that average. Okay. Right. Exit when the RSI closes above 77. Again, and I have to stress, this is when I'm no, just normal candles, Lucas. Exit when the RSI closes above 77. So again, these are the settings that I'm using. I would stress, go and play around with it. That's what's nice about this. Personalize it. And like I've given you some ideas as well. You could use a stochastic as an exit. So give you some ideas there. Or you might just use purely a price based exit as well. But anyway, these are the rules that I've got here. So as I've said, please do back test this, because I can give you all of these rules, but it's so important that people go and back test themselves, because when you back test something, it gives you the confidence in the strategy rather than me dishing out loads of numbers to you and you're thinking, oh, I'm just going to go and trade the pattern. Well, I'd rather people go and back test. That's the responsible thing to do, so you actually understand what it is and you've seen it. So you go back and you're looking back over every instant. You log every individual trade. You log it all in a spreadsheet if you're going to do it manually, or of course you can back test using software as well. Oh, okay, right. So let's move into some of. No, Daniel, you've never used an ATR indicator for an exit. Me neither. That's not what I've just said. The average true range indicator for this is for calculating your stop loss. Exactly. So the ATR, that's all it's for. It's nothing to do with the exit. Right. Okay, so let's have a look at some back tested results first. This is on the daily time frame, historically. So it's giving an annualized return, an average return of 8.6%. So, like I said, it's not going to set the world alight. It's not going to make you your fortune. It's a plodder, but it doesn't take a lot of trades. This back test took me back to 2013, right? So it's done 365 trades over 12 years. So it's not a lot of trades in the grand scheme of things. So it's not going to give loads and loads of profit because it's a low trade frequency strategy. However, it really is a plodder. I'm going to show you the live trades in a moment. The current, sorry, the forward live trades over the last couple of years. But like I said, it's a plodder. What else is there within this? It's got quite a high win rate, but the average loss to the average win means that it's a slightly inverted risk to reward ratio. But that's okay because you've got a nearly 70% win rate. So that's okay. Sharp ratio, a little bit under one. Ideally, it'd be at one, but it works. This works. Expectancy's okay over here as well. So, okay. Average trade duration, about 16 days on average. So that's the historics. Okay. Now, as I keep stressing, this is a low frequency strategy. Now, we can increase the frequency. That's why I'm about to show you this on an 8-hour chart as well. So, yes, Brett, you're getting ahead of me. I love it when people, try and get or do get ahead of me. Yes, you're absolutely right, Brett. But I'm going to show an 8-hour chart here tonight. So I'll talk about the 4-hour time frame as well. But yes, by going down to a lower time frame, you're going to get more trade frequency. If you get more trade frequency, it may give you a slightly improved result or profitability overall for the strategy. Okay. So, but even on an 8-hour time frame, it's still in relative terms relatively low frequency. Okay, so those results were based on 1% risk per trade. It's not designed to make millions per year. However, it can be adapted as I'm saying here. So you can adapt it and those rules on the daily to probably make it more profitable, as I've just hinted at here. So think about that. That's fine. And also you can look at other time frames and other markets. I've only got this running on one market. That's it, the S&P. You're like, oh, well, what if I did it on the S&P and maybe on the Japanese Nikkei or wherever? Yeah. So some considerations there. What about the live results? Well, I've ran it live since February 2 years ago. So let's go and have a quick look. Okay, so the return actually for the last 2 years has been 19%. So it's about bang on, really. It's, if anything, slightly higher than the historical return of 8.6% a year. So that is the live return. Over the last 2 years, it's done 56 trades. So again, it's bang on, really, low frequency. Over 2 years, 56 trades. It's not a lot, is it? It's had a just under 12% drawdown. Its live win rate has been 71%. And again, the average loss to average win is slightly inverted, but it can deal with a slight inversion on the risk reward because the win rate is high. And that's why the Sharp ratio is just a bit under one, really. Expectancy's fine. So that's fine. All good. All pretty reasonable. It's reasonable. Like I said, not going to set the world alight, but it's plodding along. And these, I literally took this screenshot because I use a bit of software um, for this to automate it. Okay. And so these are all, so that one was this last, I think this was this was the last trade that it was taking when I took these screenshots. Yeah, the last closed trade it took on the 2nd of January and it came out on the 21st of January. So you can see over here some of the results here, and they all vary. Some are a bit above 1%, some are under, depending on when that RSI gets above, when the RSI gets above I'll spit it out in a minute. When it gets above 77. There we go. There you go. Thank you, Martin. It's been a long day. And I've got to listen to Donald Trump in a half an hour or so. So, okay. So let's move on. Right. So thoughts so far. Okay. I think you're all with me so far. And I hope you've been taking some screenshots. Like I'll say this again. This recording will be up within a week onto Tickmills, onto that site. I'll email them tomorrow and say, right, it's all fine. Can you let me know? And normally their IT people are very good, and it might be up. Just depends on how busy their IT people are as to how quickly it gets loaded up. But usually, certainly within a week, it might be up within 2 or 3 days. So keep an eye out for it on that microsite I've already given you. Uh, This is software. Sorry, Saber. This is software. Yes, yeah, software. It's personal software that I use. But Ash, I know you've commented on that as well. I can come back to that later. Let's carry on for now. Could the strategy? Oh, good question, Joe. Could the strategy be used to drip feed into stocks and shares ISA? Um, well, you're saying obviously wouldn't require a stop loss. The strategy is designed to have a stop loss. You can do it. You're right. You're actually, Joe, when I first created the strategy, I created it with zero stop loss. All right. So, because you're right, if you so for example, if you're allocating within your portfolio, £500 to a trade when it comes along, but you've got 100,000, 200,000, 300,000 pounds in your portfolio, then yes, you don't have to use a stop loss because even if it's in its trend, it pulls back, and actually it carries on going all the way down a lot lower where you would have otherwise got stopped. But effectively, you've got a stop loss on your account because you've only allocated 500 of your capital to it. And all you do, Joe, because this is how I originally tested it, but is you only exit when the RSI gets back above 77. So you could do that as a strategy because you're unleveraged and yeah, no stop loss, and you only exit when the RSI gets above 77, or you might say, 85, 90, whatever. And you sit underwater for sometimes for long periods, but it doesn't matter because you've just asset allocated within a portfolio. So that is something to actually consider, Joe, because that's how I originally designed it. And then basically I realized that for traders that's no good because traders are usually using leverage, and so therefore we had to create a strategy around it with stop losses. So yes, you can do it, Joe. Right. Thoughts so far. The live results are on a par. uh no, Brett, I haven't done that, but you could look at that. Um, the live results are on par with historic back tested. Okay. You can manually back test. So you don't have to use software. You can manually back test. Um, but if you want to use software, I use Trading View charts. Trading View charts have a testing algorithms within it. So if you use Trading View, then you can backtest this sort of thing on that. You can backtest using MT4 charts, or you can use something like Forex Tester, which is quite a good backtesting tool. Even though it's called Forex Tester, you can test things like stock indices within that as well. So, but certainly things like Trading View, you can test it on as well. I've only ran this so far on the S&P, but as I've already stated, you can look at any stock index for this. If you wanted to have a look at it on commodities or any market that gets into long-term bull markets, then yes, in theory, there's no reason why you can't look at it at on anything really. So, as I've already said, the settings can be altered. Can you please show your RSI indicator settings? I've already gone through that, Dasha. The RSI settings it's a 4-period setting. That was it. Maybe you weren't here at the beginning, but yeah, 4-period RSI. That's all it is there, Dasha. So, okay. Sorry, lots of questions coming through. I'm trying to make sure that I don't miss anything. Um, CH, yeah. So if you're not using leverage and you're as I just said to Joe there, then in theory, yeah, you're risk managing because you're only buying so many shares. So if you do this like on the SPY ETF, yeah, so you're going to use it on the S&P exchange traded fund, then you're going to buy X number of shares and you're only allocating a certain amount of capital to it, then yeah, you can just say, well, I'm going to buy it on this and I'll sell it when the RSI gets to 90. And if I go underwater for however long, I don't care because it's only a small amount of my total capital. Um, and so and do it that way. It's a completely different way of trading because that's more investing, sort of really. So yeah. Okay. Settings can be altered. Is there anything else? Can this strategy be used for call options? I've never considered that, Dasher. I don't know. The problem with buying call options is, of course, time decay. So as time erodes the value of the option, then yeah, that is your downside to it. But in theory, you could have a look at it. Yeah. Um, did I test? Is it tests on regular or all sessions, Abdul? It's tested on the daily chart, which is tested on the daily CFD. So the closes at 10 p.m. GMT. Okay. So 1 hour after the US stock market close. Okay. So that's what it's based on. 1 hour after the US stock market close. Um, can we manage the risk reward ratio? Absolutely. You can play around, as I keep saying, with all the settings, personalize it. You don't have to use an RSI as an exit. Like I said this earlier on, you can just use a static exit. You can use price as an exit. Play around with it. Yeah. Okay. So what about other time frames? Let's get on to that. So this is another one, an 8-hour time frame. Now, the interesting thing is, and this is where again I'm going to give you some ideas here, is when you change time frames, they have different volatility, different types of movement, different types of noise. So when you come down to, because some of you might say, oh, could I use this on a 5-minute chart for intraday trading? Maybe, but of course, the dynamics of a 5-minute chart are of what goes on intraday on the likes of the S&P. There's lots of days where there's lots of noise. So I don't know whether it would work on a 5-minute chart. But there's nothing wrong with you going and testing it, but you might find you can't make it work because there is a lot of intraday volatility. Okay, just a little consideration there. So I've never tested it on a 5-minute chart, just letting you know that. Anyway, 8-hour time frame. So because of even on an 8-hour time frame, settings need to be adjusted because it's still subject to more movement intraday. So now the settings are different. So I use the 350 period, not a 250 period SMA. So the benchmark is now a 350 SMA. On this time frame, the 8-hour chart, the price, the RSI does need to go below 20 because it's on the 8-hour time frame. There are a lot more signals. So actually, I filter those out by actually saying, nope, the RSI does need to go below 20 now. 3 times the average true range as a stop loss. Exit when the RSI closes above 77. And the average range period is now 40 on the 8-hour chart, not 30, which is what it was on the daily. Again, I would encourage you to take a screenshot of this. This will just give you a template that you can then go and adjust it. So please do take a photograph or a screenshot before I move on. Okay, I'm assuming that's all done. If anyone hasn't done it, just let me know. Right. Oh, I'm already done. Right. Okay. Straight in. Look at this. Straight into the results here. I think I've got a, well, I don't really need to show a chart again. No, I didn't put a chart in because I just need to show you the results. So overall, what we're seeing now. So going on to the 8-hour time frame, you can see, look at the jump up in the number of trades because we're now on a slightly smaller time frame. The return is higher. It's still not, for some of you, you're like, oh, Charlie, I want stuff that's going to make, 5% a month, not 12% a year. Yeah, that's fine. But this is a very robust strategy. And so it'll just plod along. For some of you, play around with it. You may find ways to get it to make 20% a year, 30% a year, whatever. Play around with it. But these are the settings that I use for it. So back tested all of this. Historical drawdowns pretty low, volatility's low, Sharpe ratio's good, win rate again, even on this time frame, sitting around 70%. What else is there? Slightly inverted risk reward again. No surprise there because it does give the trade a little bit of room as far as the stop loss is concerned. But overall, average trade duration about 5 days. So it's again a nice plodder on the 8-hour chart. So well worthwhile having a look. And again, you can adjust those settings that I've just shown on an 8-hour time frame. And like Brett was asking earlier on, what about could you do it on a 4-hour chart? What sort of results might you get there? I don't know. I haven't tested it on a 4-hour chart. Fill your boots. So yeah. Okay. Now, I've only just started trading this on live on the 8-hour chart. So if I come to the real results, live results, bless it. It has literally only had 3 trades so far. The first trade was taken on the 27th of January, and it's had one here in February as well. I was taking these screenshots earlier this week, so it's only done 3 trades so far, but that's where it's at. Okay, so yeah, this is my personalized software that I have, so it's not widely available, unfortunately. But like I've said, you can manually backtest. You can lots of charting packages have you know, quite straightforward backtesting facilities built within them now. So yeah, there you go. Lucas, that's very kind of you. Can I read that out for anyone who's watching the recording? Because they won't see the comments. You gotta love this, man. This is how you teach. I'll take that. I'll take any compliment I can get. Like I said earlier on, I can't, I don't get them at home, so it's nice of you to do that. I'm joking. Right, let's move on. So, must be back tested and adjusted to your personal taste. We're all different. Some people are going to want more aggressive systems. Others going to want them like I have them, just plodders running along in the background. So it's very much a personal thing. Um, you can test it, as I've already said, on different indices, plus on different time frames. Why not? And of course, the risk warning is that there are no guarantees that live performance will be. Let's just make sure that is still working. Okay. I was just making sure that the recording was still on. Yeah, it is. Um, there are no guarantees, and that's why we always put these risk warnings in. I can show you a strategy like this with all that back tested results and the fact that on the daily chart it's been plodding along quite nicely for the last 2 years as well. But we don't know 100% that it's going to work forever, but certainly the data looks good on it. And so I see no reason, considering stock markets generally like to trend up. There will be periods where it will go through losing periods. You've got to expect losing periods. But as they are predisposed to going up, remember, if a stock market goes into a bear market, so if I take us back to one of the chart from earlier, okay, so if the S&P goes into a bear market and sells off, once it goes below that 250-day moving average here on the daily chart, well, any time that the RSI is below 33 down here, makes no difference. It's not going to be, there's no signals because that filter is now not being met. So once you're in a bear market, it doesn't trade. And in fact, in 2022, guess what? It took like one trade at the beginning of 2022. Once stocks went into a bear market, well, it stopped delivering signals. So it's only going to deliver signals when prices are generally in an upwards trajectory. Okay. Let's get this back. Okay. Right. Where did we get to? So I think although I'm putting the risk warning here, and that there's no guarantee on live performance, I'm fairly confident with it that over the years ahead that it should still just be a plodder. All right. So for me, okay. Okay. There we are. We're here. It's taken me 50 minutes to go through that. I'm sure there's some more questions. So this is the website to go to if you want to get a recording of tonight's webinar. It'll get uploaded in the next few days, I would think. Plus, all the historical webinars that I've done on all sorts of subjects are stored on there as well. And lastly, if you are interested in a quality broker, then do check out Giuseppe or email Giuseppe at tickmill.com and I'll be happy to answer any of your questions with regards to Tickmill. Right, let's go back and see what questions we have got here. Chris, is the RSI length still 4 for the 8-hour chart? Yeah, good question, actually, Chris. It is, but I don't think that's. Do you know what? You just give me an idea, Chris. So coming back to the 8-hour, you could look at the form at that RSI itself. I know you've just given me an idea there. I've never thought of adjusting the RSI when going to a different time frame. So for the daily, yeah, that's optimized for the daily, Chris. But yeah, why not have a look? What about an RSI 3 or an RSI 5 or 6? Yeah, it's not a bad idea. It's certainly worthwhile having a look at. Um, Uh, Diane is saying that this is light years better than a TikTok wannabe guru. Yeah, fair enough. I'm way too old for that. I am on TikTok actually. Yeah, check me out, Charlie Burton. But I don't actually post. I have someone put the posts up for me. I don't actually personally get involved in them. But what about intraday trading with this strategy? Yes, Marco, I have talked about that. By all means, go and test it. I said this earlier. There's if you want to go and test it on a 5-minute chart, you would 100% have to change all the settings and play around with the settings and the rules. But I don't think it will work on a 5-minute chart because I think on a 5-minute chart, there is no trend day to day. There is a micro trend, of course, but it could be up, could be down. So I think you're fine. But by all means have a play around with it. Maybe you introduce another filter and it does. But yeah, have a look. Well, you still got the moving average as your filter, so maybe it does. But yeah, have a play with it. I've only tested it on the daily, and it was only recently that I thought, oh, maybe I should have a look at it on a smaller time frame to see if it generates more signals, i.e., the 8-hour chart. So yeah, by all means, test it on anything. Um, is it important to keep an ear on stock news? I don't know if that's a general question, Zilani, or not, but yes, generally as a trader, I do. I like to be on the pulse of what's going on all of the time. But if you're just trading a mechanical strategy like this, it's not whatever's going on in the news, you're not using that for the strategy. You just commit to the strategy and execute the plan. So doesn't matter what the news is. But so this is a rules based mechanical strategy. But as a general rule, yes, of course, I think it's good to keep an eye on the overall on the economic news, etc. Can you not apply reverse strategy and sell it? Laszlo, what did I say to you earlier on? If maybe you weren't here at the beginning, I don't know. The so it's a good question. Maybe you weren't here right at the beginning. The stock. Okay, so why not just say, well, once price is below the 250 SMA on the daily chart, well, why not reverse all the rules and then it sells every time there's a retracement back up? Trust me, I've tested it. It does work, Laszlo. It does work. It does, but there's the problem is this bear markets don't last that long. So overall, when you just do a carte blanche back test on it, it won't give you that many historical trades. So you can do it. I'm having to backtrack a little bit. You could do it, but when I'm just doing a back test on it, it just looks really poor because there's not that much time when stocks are below the 250 SMA. Do you see what I mean? Because bear markets generally are quite short in duration. So you can do it, but when you do a back test, it will just look like, oh, it's not that good. But it's just because it doesn't deliver that many trades. So yeah, you could do it and just and test it that way. And so yeah, but generally speaking, that's why I've ignored it. And I think the other thing, when I did do some back testing on it, Laszlo, is that the volatility goes up generally when you go into a bear market. So then you've got to change all the settings around again because markets are more volatile. So um, I'm just giving you my advice, and I would stick to the long only. Netherlands isn't an option on the site. I don't know what you mean there, Lucas. I don't know what you're referring to. Daniel, thank you. Brett, daily time frame, one entry, entry, both close on 6th of November. What is this? I mean about multi-open trades. Sorry, Brett. I don't know. Can you? Uh, I don't. You'll have to explain on that. I'm currently reviewing your previous videos in your car. Oh, okay. When driving to work. Oh, great. Okay, so you're using them as a yeah, cool. Ash, this strategy looks like it would signal a buy on Palantir stock right now. Interesting. Yeah, the thing is, Ash, I don't know how it will get on individual stocks. So, but yeah, fair enough. Test it. Um, 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 um. Thanks, Lucas. Good stuff. Chris, it was giving a buy signal on the daily and the 8-hour chart. Yep, it was. I was talking about that at the beginning. I'll go into that if you want. I'm just trying to speed up because I appreciate we're an hour in now. Um, maybe Stuart. Yeah, Stuart saying, well, maybe the VIX would help the strategy. Yeah, it could well do. Thanks, Mansuk. Is the ATR period? Oh, ADR. Huh? RSI, Piero. RSI. Yeah, the default period it depends on the charting software. Some charting software it will come up as the default as 14, others it will come up as 21, but those aren't the settings I'm using for it. Yeah. Uh, Laszlo, great. You tested something similar on the Nasdaq on the Audi with good results. Oh, excellent. Okay. First proper technical trading webinar you've ever attended and thoroughly enjoyed it. Thanks, Kois. You're a new younger trader with limited financial literacy, but could clearly understand the rules and features. And okay, that's really nice. Thank you. Do give them feedback because I think they usually ask for feedback. If this works as good as your diversion strategy, which is really great, gonna try it. Thanks, and yeah, another excellent lesson. Thanks, Johan. Yeah, let's not tell everyone about the diversion strategy now, shall we? That's my what I use a lot. Actually, I'm in some divergence trades right now, Johan. Right. Thanks, Laszlo. How many trades are needed for a proper probability breakdown? Yeah, it's a great question there, Abdul. Really, when you're doing a back test, you need at least 100 instances. At least 100 instances when you're doing a back test. So, yeah, if you do a back test and you've got like 8 trades, it's not enough. So, Siobhan, thank you. Use the 50 SMA strategy taught by Charlie. Awesome work. Been having good trades. What one's that one, Siobhan? I've forgotten. Well, I genuinely have. You'll have to explain. What one was that one? I've done so many webinars and I've forgotten. Thanks, Alan. Much appreciated. Chris. Right. I think Brett means if it gives another buy signal before. Yes, Chris, if it gives another buy signal, let me go in here. Where will we go? Oh, there we go. In the screenshot. Right. It does happen that it will give on the system here and the way my system here trades it. There we go. Because it's on an 8-hour chart. It actually the RSI stayed below. Was it on the 8-hour chart? 20, and so it actually gave a signal at 8 a.m. and then another one at 4 p.m. And you take both. So if it gives multiple signals, yeah, you take them. Yeah, that's how the software that I use takes it. Yeah. Okay. Oh my God. Oh, there can't be 28 messages still. I don't think so. Hopefully not. It says 28 new messages here. So, um, how many trades? Oh, I've already done that. Adding a position. Sorry, Brett. Yes, this is an example of just that. Oh, I see. The first trade did not close before getting the second entry. Yeah, absolutely. Yes, exactly. So you just take it on the new bar. So if once price goes into a new bar, if the RSI is still below wherever the trigger level is, 20 in this instance, then it produces a second signal and you take that as well. That's how I've tested it. So it can be that it can actually be in 5 open signals, but it works. So, yeah. Uh, Johan, which trades? Oh, I might do if I can get to the bottom of these 28 questions. Then yeah, I might do that. So I'm trying to get. It's too late anyway, Johan. But I'll show you them if you want. Thanks, Rhino. That's all right, Abdullah. I think I answered your question. Moving average SMA and 200. I've still forgotten. Sorry, Siobhan. The 200 and the 50. What was that all about? Oh, the golden crosses and stuff. Yes. I I only did that a month or two ago, didn't I? Yes, the golden crosses and the death crosses. And when price pulls into them as they are golden crossing or death crossing. Yes, I remember now. The memory's not always that great, Siobhan, but I'm glad you're looking at that. Great. Good. Can you lower your lot sizes and layer entries between your initial entry and stop loss? I guess. Just have a look at it. Yeah. Thanks, Justin. Great info. Thanks, Stu. Richard. Thank you as well. A lot of you are putting posts to hosts and panelists only, so other people aren't seeing your questions or your comments. But I'm just reading out everything. I have got to the bottom there of the questions, which is good. So I'm going to press stop on that. Okay. So mm, okay. So I'd already prepared the template here. This is the live template. So as you can see, this is on the daily chart at the moment. The RSI is firmly below 33. So it's got this buy signal down here at the moment. So yeah, it's in play right now on all of that. But that's for this strategy. There are other strategies, of course, that we all use. And Johan was just saying, well, what divergence plays are you in right now? That I just said. Well, actually, from a divergence perspective, hold on a second. Let me just take this off the screen for just a second. Just going to change my settings around a little bit off screen. Bear with me a second. Are you still there? Just going to make sure people are still there. Uh, okay. So on the weekly time frame of the S&P as it stands, the S&P is diverging. Let me put my trend lines on. So this is what I've been looking at. And I am in a trade at the moment on this, but don't go and trade it. I'm already in. Let's put my trend lines on. Okay. So what you can see, this is on a weekly time frame. The S&P, we've got this lovely rising trend line, but it's also a bit of a channel. And so I've got this upper trend line, which comes all those lows from back there in 2018, all the way through here. It's respected it. It's gone the outside of it, bounced off it, come down, bounced back to it, then come off, and then it's come all the way back up to it, just into what, December of late last year, and just into January around the highs. So it's into, or has been into, that upper trend line there. But also at the same time, hopefully you can see this, and I'm not going to do a whole session on divergences. But hopefully you can see these peaks here have been getting lower on the MACD. And also the MACD histogram, as you can see, the green histogram peaks have been getting smaller each time as well. So that's a divergence. So we're diverging, double divergences going on here into those highs, or that technical trend line up there as well. Plus, of course, I look at all the other news and everything else that's going on, and sentiment. I look at breadth as well. Breadth was waning up here near the highs. But that was the technical setup. But there were other things I'm looking at as well. So there you go. So this is a quick thing there. Right. I'm not going to tell you anything more. So, do I ever use bots? Well, what the software I was showing you, Werner, today, uh, essentially is like it creates bots that can auto trade. So yes, but in the main, my personal trading is me. I've been trading for 28 years and I still love the art of trading. But I do have bots because there's a lot of people out there who don't have the time and they just want signals and things like that. So yeah. But for me, I love the art of it. I love the spiritual aspect of trading, trying to work it all out. Yeah. Bringing all of this information together to try and form, you know, trading decisions and using strategies, using anecdotal, sentiment, like I've just said, breadth readings when it's if it's on the stock markets and news, bringing it all together. So that's what I love. I'm a money manager as well, so I like to bring all of that together for what I do. Okay, I think we're going to have to call it a night pretty much. I'm just going to bring the slide back up. Will it do it? Oh, okay, let's do that. There we go. There's your contact information there. Okay, yes. Last question from you, dear Diane. Oh, hold on. There's two more questions here. I'll just read the last two out. Robert saying, "What sort of return do you get annually from trading, and what should we expect to achieve in our first year or two?" The reason I'm laughing, Robert, is because it's really there's there's so many factors that come into what creates a return. Okay. Risk being one of the biggest, trade frequency is another. Okay. So if someone said to you, "Oh, I make, 15 to 20% in a year," but they might only be risking, for argument's sake, 0.5% per trade. That's a fantastic performance because all they're doing is risking 0.5% or maybe 1/3 of a percent per trade. That's a great performance. So if I just say, "Oh, what my percentage return is that I look to achieve," that that is a risk adjusted return. So that might be different to what you want to achieve. Okay. So when you're trading with larger accounts, what most people do, myself included, is risk less, a lot less per trade than your average trader. So all I can say is that I think the average trader should be in this bracket. 0.5% risk per trade to 1%, depending on, their attitude towards risk, etc. So somewhere in that bracket. I can tell you right now, I am a lot less than that because I don't need to be trying to make 30, 40, 50% a year. Yeah. Because as your capital grows over time, you can reduce your risk. So I don't need to be making the same type of percentage gain that someone who's got $5,000 in a trading account may be wanting to make a lot more. So yeah, so I don't really go into that because my percentage return is probably going to be a lot lower than yours because I don't risk much. So I'm not trying to make massive percentage returns. Um, and what should you expect to achieve in your first year or two? To answer that, Robert, all I would be saying to you right now, if you're in your first year or two, is forget how much trying to make, just learn. That would be my advice. Just learn, just build your experience. I don't care if you don't make a bean in the first year or so, because what you are doing is accumulating experience. That is the best return you can get in your first year or two is building experience. Diane, Charlie, last question. Do I do one-on-one mentorships? I'm not here to talk about that sort of stuff. I don't have an academy. I don't do that sort of thing. but I don't tend to do one-on-one stuff anymore. No, I don't tend to have the time for that sort of thing. Okay, what can one average per day if we learn from you on average? Oh God, I'm well. Some people claim they're making 2% a day. Oh, I'm rubbing my hands together now. I would run away, Werner, as fast as you can from anyone who says that they're making 2% a day. I'm not saying that anyone can't make 2% a day in any given day. I can make 2% in a day. You're getting one good trade and you can do that. What we're talking about is 2% a day every day. So without even compounding, 2% a day, let's do the maths. How many of us are still here? There's 80 odd of us still here. Okay. So 2% a day, that's 10% per week, which is 40% per month without any compounding. And what's that? 480% per year. Run away from them because they are lying to you. And so is it possible to make 480% in a year? Of course, anything is possible in any given year in the markets. But anyone who is saying that, yes, they average 2% a day are lying to you. I'm telling you that right now. I've been doing this for 28 years. I've seen every trick in the book of what people claim and all of that sort of stuff. So there you go. Hopefully that answers your question. Thank you ever so much, folks. I'm going to go and see what Donald Trump's saying right now in his press conference with the UK Prime Minister. If I stay here, you'll keep answering more questions. So I'm going to have to go. Sorry, I apologize. I can't keep asking more questions, answering more questions. So next time, we'll be back next month. Save your questions, back next month. And thanks for coming along and all your questions that you have indeed thrown at me tonight. Hope you enjoyed it.